Ladies and gentlemen, good day and welcome to Max Ventures and Industries Limited Q1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sahil Vachani, Managing Director and CEO, Max Ventures and Industries Limited. Thank you, and over to you, sir.
Thank you. Good morning, ladies and gentlemen. Thank you for joining us on the Max Ventures and Industries Q1 FY23 earnings conference call. Along with me today, we have our CFO, Mr. Nitin Concall, Mr. Rishi Raj, Chief Operating Officer, and Mr. Rohit Rajput, CEO of Max Asset Services. We also have SGA, our Investor Relation Advisors, on the call. The presentation and press release has been issued to the stock exchanges and uploaded on the company's website. I hope you've had the chance to go through the same. Pleased to share a strategic overview of the company. I'm extremely pleased once again to share that we have now entered into the residential real estate segment with an acquisition of a large land parcel in Noida. We plan to launch our first luxury residential offering in the first half of the next calendar year, which is estimated to have a sales potential of over 1,300 crores. We've also made progress on the business development front in the commercial real estate segment as well. Delighted to share that Max Estates has been adjudged as the successful bidder for 2 land parcels in Noida auctioned by Axis Bank. Most importantly, these land parcels are contiguous to the existing development Max Square and hence enables us not only to create a larger office complex but a mixed-use ecosystem. Our completed projects, Max Towers and Max House Phase 1, are now 100% leased at approximately 30% rental premium to the micro market. The latest lease that we have signed is at more than rupees 130 per square foot per month, setting the path for the next round of re-rating. Progress on Max Square and Max House Phase 2 continues to be on track and expected to be completed by Q4 FY23 and Q2 FY24 respectively. On the corporate structuring merger of Max Ventures with Max Estates, we have received approval from the stock exchanges and hope to receive NCLT approval soon as well. This will simplify the corporate structure and also enable us to rename the entity as Max Estates, a move that we believe will resonate well with real estate being as the pure play focus of the company. The above are in line with our stated objectives as outlined during our key KPIs at the beginning of the financial year. I'm also delighted to share our proposed operating philosophy which will be underpinning the expansion of our real estate portfolio. With 100% focus on the real estate business, we have a renewed purpose as that to enhance the quality of life through the spaces that we create. And we aim to deliver on this purpose through our stated strategy of being in one region and across multiple asset classes. With Delhi NCR as a geographical focus, we want to expand in premium residential and commercial segments. On the commercial real estate front, we have successfully delivered on our purpose enabled by the work well philosophy at both Max Towers and Max House, as also in Max Square and in the Phase 2 of Max House. Work well philosophy is aimed to ensure holistic well-being of office users, both emotional and physical, by curating an ecosystem of spaces including F&B and several amenities, delivering impeccable service standards and designing sustainable developments. The impact of this is evidenced in 100% occupancy at significant premium to the micro market. We aim to replicate this in our upcoming offerings both at Max Square and in Phase 2 of Max House as well. Our efforts have been recognized with Max Estates being awarded as an Emerging Developer of the Year and Max Square as the commercial project Office Building of the Year 2022 by ET Real Estate Awards. At the same time, our facilities management business, Max Asset Services, has received an award for excellence in customer service as well. After successfully demonstrating our development and execution capabilities in the commercial real estate segment, we are now all geared to disrupt the residential real estate space and create Max Estates as the most preferred brand for residential real estate as well. Similar to what we've done in the Work Well philosophy for office real estate, our development and operations of our upcoming residential communities will be guided on what we have coined as the Live Well philosophy. To elaborate, Live Well for residential spaces will envision a living ecosystem that enhances and enriches the quality of life of its occupiers by building a confluence of spaces that promote sustainability and enables comfort, healthy living, and community experiences while ensuring their physical and emotional health and well-being. Close attention will be paid to elements like air, water, safety, biophilia, recreation, and more by bringing the highest standards of expertise that goes into every stage of planning and execution, from design to operations of our spaces, which most importantly, the objective is to lead to an unparalleled experience for all our residents and occupiers. I would like to spend a little time on the future outlook of the business. Although we have delivered on our stated target of acquiring 1 million square feet each in commercial and residential for this year already within Q1, the efforts to further build the future development pipeline does not stop. We continue to evaluate land parcels, especially in Gurgaon, for a commercial and residential development, and confident to close at least one of them soon. With these new acquisitions and a very strong project pipeline under development, we expect to end FY23 with a development portfolio of approximately 6 to 7 million square feet. This is 3x the size of our FY22 footprint. As we gear up for this scale, our focus is to strengthen organization capacity and capability to drive seamless execution across both commercial and residential opportunities, and in turn unlocking multi-fold value for all our stakeholders. I'd now like to hand over to our Chief Operating Officer, Rishi, for a detailed business update.
Thank you, Sahil, for the strategic overview. First of all, I'm happy to share that during Q1 FY23, the total revenue for the company increased by 47% year-on-year to rupees 273 million. EBITDA increased by 40% year-on-year to rupees 87 million, and PAT increased to rupees 63 million as compared to just rupees 0.1 million in Q1 FY22. The robust result, strong increase in lease rental income led by higher occupancy on year-on-year basis, as well as sale of units at 222 Rajpur. Let me now give you project-wise business update and then move on to the development pipeline. Let us start with Max Towers. Total leased area owned by Max Estates in Max Towers is now 100% occupied with leased area of 3.02 lakh square feet. Lease rental income from Max Towers increased by 6% year-on-year to INR 82 million in Q1 FY23. Full year rental for Max Towers is expected to be about rupees 350 million in FY23. Moving on to Max House Phase 1. Max House Phase 1 is 100% occupied as well with total leased area of 1.05 lakh square feet. Lease rental income from Max House stood at rupees 38 million in Q1 FY23 as compared to only INR 6 million in Q1 FY22. Full year rental for Max House Phase 1 is expected to be in the range of rupees 150 to 160 million in FY23. The weighted average monthly rental rates continues to be at significant premium to respective micro markets for both the office assets. That is at rupees 106 per square feet per month for Max Towers and rupees 125 square feet per month for Max House. As mentioned by Sahil, the latest lease signed at both these projects were higher than rupees 130 per square feet per month. Hence, the future income potential of the campus has significantly increased for both these projects. In addition, I'm delighted to share that our 222 Rajpur, the luxury villa development at Dehradun, is now 100% sold. Last unit was sold in Q1 FY23 at the highest sales realization that the community has seen so far. The work on Max Square and Max House Phase 2 both remains well on track and expected to be delivered by Q4 fiscal year 23 for Max Square and Q2 fiscal year 24 for Max House Phase 2. And we have already started receiving strong traction of inquiries for Max Square at the back of proactive outreach and engagements with potential clients. Overall market environment for office as well as residential continues its positive trajectory. Net office absorption pan-India in Q1 FY23 at 8.5 million square feet is 185% higher on year-on-year basis, whereas supply at 11 million square feet is lower by 10%. Net absorption was led by Bangalore with 48% share, followed by Mumbai and Delhi NCR with near identical shares of 16% each. On residential front, H1 2022 sales volume reached the highest level since first half of 2013. Growing by 60% year-on-year, the sale of 158,705 units during H1 2022 was 19% higher than the preceding period, despite home loan interest increasing by 90 basis points due to hike in repo rate during the same period. While the latest round of another 50 basis point increase in repo rate may have some impact on the demand, the mid to long-term fundamental story for Grade A plus development in residential spaces remains intact. Now, let me move to new residential and commercial development, which Max Estates has signed up. Max Estates has acquired 100% equity in Accord Hotels and Resorts Private Limited for an enterprise value of INR 306 crores, which holds a 10-acre land parcel in Sector 128 of Noida. We plan to develop a mixed-use luxury residential project on this land parcel, which will have an estimated sellable area of 1 million square feet plus and sales potential in excess of 1,300 crores. The project is planned to be developed in 2 phases and will cater to premium end of residential market. The first phase is planned to be launched in first half of next calendar year and is expected to be delivered within 3 years of launch. Project will comprise of 200 to 250 premium residential unit with only 20 to 25 units or residences per acre, one of the least dense residential community in Delhi NCR. Inspired by our live well philosophy, the project will have curated mix of best-in-class amenities focused on community and recreation, health and wellness, and sustainable living. Now, coming to the new commercial land transaction. Max Estates, through its SPV, had bid for 2 land parcels being auctioned by Axis Bank. Axis Bank has sent a confirmation letter ascertaining the company as successful bidder for both the land parcels for a total consideration of rupees 220 crores. Both these land parcels combined are spread across approximately 4 acres in Sector 129 in Noida. These land parcels are contiguous to Max Square and under construction office development by Max Estates. The acquisition will enable it to create a 6.6-acre office-led mixed land use campus. The total development size, including Max Square, which is around 0.7 million square feet, for this campus will be in the range of 1.5 to 2 million square feet of the campus. Hence, while entry into residential segment has become a key milestone for the company, we have continued to make progress on commercial real estate front as well. With strong project pipeline, superior execution capabilities complemented by strong balance sheet, sets Max Estates to become a leading real estate player in Delhi NCR, which today has a huge vacuum and is ripe for continued story of consolidation. Apart from all of these initiatives, Max Estates has also partnered with SAP for digital transformation of the company to enhance customer experience and overall efficiencies. SAP, along with its implementation partner Hybar Technocrat, will implement its next-gen intelligent ERP SAP RISE 4 HANA with real estate-specific modules including finance, procurement, property, development, leasing, and utility billing, asset management, and project management. In addition to automating the sale process and integrating all construction, marketing, sales, and rental operations, the project aims to redesign processes using latest digital technologies. Now, coming to the key initiatives during FY23. Let me break the update in two parts. Ones we have achieved and others which are in progress and are on track. Let me start with what we have achieved. We have officially now ventured into residential real estate. Second, we have also acquired land parcel for new commercial project as a part of our stated goal of 1 million square feet each this year in residential and commercial. We have achieved 100% leasing in Max Towers and in Max House Phase 1. On the sustainability front, we have embarked on ESG journey, and as a part of that journey, we have participated in GRESB rating, and we have identified midterm ESG targets. We have made significant progress in terms of curating ecosystem of retail and F&B portfolio and other amenities, as well as implementing events to enhance overall customer experience as tenants return to office. Now, coming to targets for remaining of FY23. We aim to close at least one more growth opportunity in Gurgaon, obtain occupancy certificate for Max Square in time, which is scheduled for November-December of this year, complete the structure work of Max House Phase 2, conclude the merger of Maxwell with Max Estates, and pre-lease a certain portion of Max Square. We also aim to implement initiatives to meet identified midterm ESG target and progress our journey on the ESG front, and continue to implement building of residential capability, including people, processes, and technology, including full transition to SAP. Overall, looking forward to exciting 3.0 journey for Maxwell, which is focused on real estate business, which is all set to scale 3x by end of FY23, and in parallel, build the organization to enable the growth ahead. Now, let me hand over to Rohit for update on Max Asset Services.
Thank you, Rishi. Let me give brief highlights about Max Asset Services. Max Asset Services, or Max, provides end-to-end managed office services, including but not limited to fit-out leases, fit-out design, office operations, etc. Our managed flexible office offering, Workwell Suites, at Max House Okhla is now 100% leased. Witnessing a strong response at Max House, we strongly evaluate keeping Workwell Suites a part of our upcoming offerings by Max Estates at both Max Square and Max House Phase 2 as well. As a part of our work well philosophy, we continue to differentiate our client experience by adding more amenities like fitness centers, salons, an early learning center, shuttle services, badminton courts, etc. We also continue to curate various F&B options to create a unique ecosystem for our clients to truly work well. With an aim to uplift our assets with the best-in-class facilities and becoming more operationally efficient, we are deploying various digital tools across all verticals, such as parking management, lift management, booking of amenities, managing visitors, and air quality monitoring. I'm happy to share revenue for MAS more than doubled year on year in Q1 FY23 to rupees 75 million. We expect the facility business of MAS to witness strong growth in FY23, as a high percentage of offices are now open and expected to avail of our services. Now let me hand over to Nitin Kansal.
Thank you, Rohit. Good afternoon, everyone. Quarter 1 FY23 results now only include the real estate business, Max Estates, and our managed office business, Max Asset Services, after exiting our packaging businesses last year. Now let me give you the financial highlights for Quarter 1 FY23. The consolidated revenue for Quarter 1 FY23 increased by 47% year on year to rupees 273 million. Let me give you a breakup of this revenue. The lease rental income from Max Towers stood at 82 million, and the lease rental income from Max House stood at rupees 38 million. Additionally, we sold one villa at 222 Rajpur, which contributed rupees 63 million to the revenues. Income from the facility management arm and workwell suites stood at rupees 75 million. Other related ancillary income stood at rupees 16 million. The consolidated EBITDA increased by 40% year on year to rupees 87 million in Quarter 1 FY23. Consolidated profit after tax stood at rupees 63 million in Quarter 1 FY23 as compared to just 0.1 million in Quarter 1 FY22. Now, speaking about our liquidity position, our gross debt stood at rupees 3.3 billion as on June 22. Cash and cash equivalents stood at rupees 1.9 billion as of June 22. Hence, the net debt stood at rupees 1.4 billion. This translates into a debt equity ratio of 1:4 as of today. Of this, 82%, that is 1.2 billion, is in the form of lease rental discounting, which is backed by rental receivables of grade A plus clients across Max Towers and Max House. During Quarter 1 FY23, we spent rupees 3 billion on land acquisition in Noida's Sector 128 for the new residential project, within a quarter of receiving the money from the sales of packaging business. We have been able to channelize it to our focus areas of real estate. I would now like to hand over to for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
The management has, which is very near to the airport, called Nazafgarh. Is the management wanting to develop, a township there or some kind of a, complex? Because it is a very strategically located place. Secondly, sir, if we are able to discount all our rentals as and when we need them, what would then be the new cash position of the company?
I'll take the first answer first. This is Sahil. Your question, if I heard correctly, was about our project 120, Sector 128 in Noida. Sorry. Oh, okay. You're talking, sorry, could you just clarify which land parcel you're talking about?
Family, Anarji Singh family controls a huge land parcel in Kazimgarh, which is very near to the airport, and which we may want to develop as a part of Max Estates or Max Ventures. So, how are we placed on that, and how soon it could be integrated into this company and done?
Yes. So the land pooling process is underway. The DDA has reopened the portals and has already issued notices for first 4 sectors for provisional land pooling. We are very confident that the land owned by the family office will be look to be eligible in the very near future for land pooling. And as it becomes eligible, Max Estates would consider a joint development opportunity to develop it. As you very correctly pointed out, this has a huge potential of close to 6 to 7 million square feet of development. It is an integrated mixed land use with development primarily led by residential, and if I may say, one of the last few parcels available in the Delhi zip code for development. Also very well connected by metro, and as you pointed out, very close to the airport as well. On your second question for debt, I'll pass on to Nitin Concall, who can answer that question.
Good morning, Mr. Hawa. Your question on the LRD, we have a total LRD potential on our 2 projects, Max Towers and Max House Phase 1, in the range of 350 to 400 crore rupees. On basis the current rentals which we are getting. Currently, what we have drawn is a number of close to 115 crores for the funded, and we have got a non-funded line of 50 crores, which we have utilized against those LRDs. Incrementally, we have a potential to raise 170 to 200 crore rupees on LRD. And I also like to supplement, post the completion, delivery and leasing of Max Square, we will have a potential to release another 150 to 200 crore rupees from LRD of Max Square, and potential to release another 100 crores from Max House Phase 2.
100 crores can be discounted as and when we want.
Yes, yes.
If you can just elaborate on how well we have integrated the startups that we had acquired, and whether they are now being of some use to us, and any new age methods that we may have adopted to really reduce the time of construction and handing over to the residents, because that we are able to recognize only a revenue when the handover is taken place. So is there some methods we have made to really reduce that timeline?
Hi, Fazil. I'll come in here. My name is Rohit. I just want to clarify a question. When you talked about investments, could you specify what you meant?
Startups, which are basically concerned with real estate.
Right.
So helping us, in ramping up our own business.
Yes. So, to address that, the 2 investments we've made recently have been in a company called Smart Juice and a company called Clearco. Both of these investments are right now focused on improving the tenant experience as well as improving the operational efficiencies of leased out buildings. Smart Juice helps us run neural networks and machine learning on the chillers, and the HVAC costs become significantly reduced to that. So that gets baked in when we are looking at the HVAC design of a building, and that gets baked in when we're looking at operational efficiencies to keep our operations costs low. The second investment, Clearco, again gets baked in terms of customer experience. It helps us deliver and monitor superior air quality in our buildings. At this time, we've been evaluating investments in construction tech, but we haven't found anything that's compelling as of now. So we will continue to look for technology that will help us do an early handover, early construction, and if a suitable opportunity presents, we will invest. Having said that, we are constantly exploring new digital technologies, and part of the move to SAP is also because of this. where we want to streamline our operations, streamline their entire cycle of procurement to delivery of projects.
Thank you. The next question is from the line of Shreyansh from Equirus Securities. Please go ahead.
Yeah, congratulations for the new acquisitions on the commercial and residential front. So I have a couple of questions. The first question pertains to, in terms of the business which we've sold, how much of that 650 odd crores have flowed in?
So we have got close to 500 crore rupees which have flowed in from that transaction.
So that's already reflected in the current balance sheet.
Yes, that is already reflected. The remaining capital, as per the terms of agreement, are expected to come latest by June 2023.
Got it. Sure. So then secondly, if you could, break it, in terms of, our next 2 to 3 years, in terms of, what are the inflows. So roughly 150 odd crores from the deal proceeds, and how much will be the outflow in terms of commercial and residential?
So if I can give you a broad perspective, we
Sure.
have received an amount of close to 500 crore rupees from the exit of the packaging films business now, and
Correct.
another 130 to 140 crores is expected in June 23. That makes it a total number of 650 crores to come from the packaging films business. On top of that, we have an incremental lines of 250 to 300 crores on the LRD, which we can draw on what we have already leased as we speak today. That makes a total corpus of in the range of 850-900 crores, which is available with us.
Right.
Now, if we supplement that, this 900 crores, on commercial, we have an existing partnership with New York Life, and in which they have taken a position at Max Square, in which they own 49%. In our all ongoing commercial projects, we expect an equity investor to come very akin to what we have done at Max Square, and this is how the capital would be deployed.
Got it. Sure, so but any number, for the new acquisition of 1 million square feet, assuming, right now we'll be putting, so how much would be going in 23 and 24 in terms of outflow, if you could break it into commercial and residential?
So, in terms of commercial, we are looking at a number of our equity share to be in the range of 200 crores on the commercial side, and on the residential side, from our first project, Sector 128, we would be more inclined to do asset-light models, whereby doing joint development agreements with the landowners. The precise numbers we would be able to share with you as and when we go ahead with further announcements.
Got it. Sure. And also wanted to understand, in the residential front, will the financial partner be interested, or it would be restricted only to the commercial front?
Currently, we are exploring partners only in the commercial side, and we'll see how it progresses from there.
Sure. And lastly, from my side, just wanted to understand what is the status of our project which was under NCLT.
Hi, this is Rishi. As far as Delhi 1, which is under NCLT, is concerned,
Right.
As I stated last time, all major objections have been addressed. Noida, there was a discussion as far as Noida's status is concerned. I think Supreme Court has already adjudicated them being operational creditors. Now the plan is the physical hearing on the plan has started. We had one hearing this month. Next two hearings are scheduled on 17th and 26th. And we are very confident now that this will lead to the discussion on the plan, and the approval process on the plan get expedited. In terms of outlook as to by when this will get done, difficult to predict, but this financial year we are expecting to make very significant progress on this front as well, which gives us another 2.5 to 3 million square feet of development.
Got it. Got it. And in case, if that materializes, in terms of outflow, that number would be roughly 300, 400 odd crores?
Yes. The number would be closer to that number.
Got it. And one last question, if I may, more towards the residential. So, we've started with the premium segment wherein, we'll be competing with the likes of, the DLFs who already have an established name, especially in the Delhi region. So, how would, I just wanted to understand our strategy on that front. How would we like to compete with those? And secondly, going forward, even in the residential, will it be, majorly towards the premium segment, or will also, be focused on the, I would say, the affordable housing segment?
Yeah, thank you. This is Sahil. I'll take that. So we believe that the NCR market, with a population of close to 22 million people and growing, can definitely afford, more than a few good, top quality and preferred developers. And therefore, we believe that there is space and opportunity for a brand like Max Estates to capitalize on this opportunity. We have already showcased a track record that we have done that in the commercial space, and we are very confident that we will be able to do that in the residential space as well. So to answer your question, we think that yes, there is enough of a market and there is depth in the market for at least 3-4 good quality brands to operate here, in addition to some of the names that you mentioned. Secondly, in terms of the offering, it's very clear. Max Estates will be a premium offering in the segment. It's what we call affordable luxury segment, and that's the focus play that we will be in. We have no plans as of now to be in the affordable housing segment.
Got it. Thank you, and all the very best.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Mr. Paymaster, individual investor. Please go ahead.
Hi. I've got few questions. One is on the lease side of the existing assets. What is the WALE? What is the rate of interest you are paying on your lease rentals? And compared to an outright term loan, whether the lease rental is more economical in terms of rate or in terms of the margin requirement?
Good morning, Mr. Paymaster. Our WALE currently is in the range of 6 to 7 years across both the projects. And coming to the cost of funding for lease rental discounting, currently our lease rental discounting is at the rate of 7.25% for Max Stars and Max House. This is pegged to the 1-year MCLR of the bank. And going forward, since in line with the change in repo rates by RBI, if the MCLR is changed, we may have an impact of that 6 to 9 months down the line.
Okay. And my second question is on the existing projects which you are planning to take up, both on the residential and the commercial. As far as the residential property is concerned, can you give the details of what is the expected outflow after netting off the receivables from the people who are going to buy the property? And in terms of the commercial property, what is, I think, did you say about 3 to 350 crore will be your contribution to the project?
Mr. Paymaster, as stated in the past interactions also, we look at an IRR of in the range of 20 to 25% on our residential projects. The detailed costing and inflows we would be able to share as and when we would be able to freeze on our design plans in the coming quarters. As of now, we are looking forward to an IRR in the range of 20 to 25% for the project.
And for the commercial property?
Even for commercial property, our hurdle rate in the underwriting is for an equity IRR of 20% plus, and we are aiming for the same both for residential and for commercial. And as as Nitin said, on both the projects, the latest one that we have acquired, that where we have been ascertained as successful bidder by Axis Bank, the closing process is on. Once the closing has happened and we have we have concrete design and other stuff in place, we will come back and update you on the details.
My question was on the total contribution of our company. If you don't have the exact numbers, as far as the residential property is concerned, what is the normal industry norm that out of a, say, total outlay of say 100 rupees, how much is the contribution made by the people who book the property and how much contribution is made by the developer, including the cost of land?
Yeah. So
yeah.
I think if you take the example of Sector 128, which is an outright purchase by us, there we are expecting from customers the contribution to be in the range of 50 to 60%. Rest will be the contribution when you look at the total project development, all-inclusive cost.
Yeah. So what is that expected outlay total cost, roughly, ballpark here? I'm sure you must have done some calculation in terms of what will be your requirement to fund the project.
So, Mr. Prema, so currently we have funded an amount of close to 300 crore rupees for acquisition of the land. And right. In terms of, there would be an additional amount. We would be able to give you exact numbers on that when we come closer to the designing of the numbers.
Okay, fine. Thank you.
Thank you. The next question is from the line of Akshay Jain from Jain Capital. Please go ahead.
Yeah, hi. So I have two questions. So starting with, when do you expect to commence the construction of land parcel of Axis Bank, and when is it expected to be completed?
Yeah. So as far as new acquisition is concerned from Axis Bank, I would say very indicative timeline. It is also a function of how fast the closing happens, but we are looking for second half of next year when the construction would commence. And in terms of development life cycle, we are looking at 3 to 4 years of development life cycle on that project.
Okay. Secondly, what would be the annual rental potential from this new commercial project?
Going by the current estimates and pricing, the approximate annual rental income would be in the range of close to 120 crores per annum.
Okay. And lastly, as this commercial land, I believe it's next to Max Square, so what will be the overall plan to develop it?
So the idea is to create a commercial office-led mixed land use ecosystem. Max Square has already, the structure is completed, and as Rishi updated, we are confident of getting occupancy certificate by the end of this year. And the plan is to create a commercial hub with more office space, enabling retail, and a host of amenities and a core of amenities that enable to create an ecosystem and add to the experience of the end users. We have found that most developments that are able to provide an amenity-led core, build an ecosystem, actually command a significant more premium to the micro market. And we are very confident that we will be able to do that, particularly with the effort that's been put in for Max Square already.
Okay, understood. That's all from my end. Thanks.
Thank you.
Thank you. Participants, you may press star and 1 to ask the question. The next question is from the line of Ms. Riya Verma from NR Securities. Please go ahead.
Hi, thank you, sir, for the opportunity. Most of my questions have been answered. I only have 2 questions. Firstly, do you plan to develop this new residential project along with a financial partner or fully own funds? And secondly, how does the future residential pipeline look like for the company?
So we are not, on the first question, I'd like to answer that with Nitin. We are not looking at any equity partners for the residential project we mentioned. future pipeline of the residential?
Yeah. So on the future pipeline, as we have updated in our investor deck as well, we have a very robust future pipeline. Our endeavor really is to get another residential in Gurgaon, and we are in advanced stages of documentation, and we hope to close that soon. But just to step back, and in the interest of all of you, here is how we are thinking about portfolio. We are thinking about developing a real estate portfolio which is balanced, and balanced on 3 counts. Number 1, mix of commercial and residential. So we have already done 1 commercial, 1 residential in Noida. We are aiming for 1 commercial and 1 residential in Gurgaon. And for that, we have very robust pipeline, and we are expecting to close that soon in this financial year itself. Second, we are doing balance from the perspective of acquisition model, which is combination of outright and joint development agreement. 1 residential that we have done in Noida is outright. In Gurgaon, we are looking at joint development agreement, which makes it asset light. And third, we are, as we have already said, we are spreading it out within Delhi NCR and in different micro markets. And that's how we are also diversifying the portfolio, both on commercial and the residential side.
Right. Thank you. That is helpful. Thank you and all the best.
Thank you.
Thank you. Next question is from the line of Prerna Gandhi from Ace Capital Advisors. Please go ahead.
Hello, sir. Thank you for the opportunity. I just have 2 questions. Firstly being, do you plan to raise any equity capital to fund future development? And secondly, any plan to have a targeted commercial or residential share in future?
So on the first question, we don't intend to raise any equity capital on the listed entity side. Our intent is to bring equity partnership on the commercial business, very akin to what we have done at Max Square.
Okay. And my second question was, any plan to have a targeted commercial or residential share in future?
Percentage market share. No, look, I think we want, at this point, the direction we are taking is we want to keep the mix healthy. And then where exactly that mix will fall will also be a function of right opportunities. The only thing we can give you as a direction is we don't want to do lopsided to either commercial or residential and keep the mix balanced. Exact number, difficult to give. It will depend on the opportunities we are exploring.
Okay, that is helpful. Thank you. That's all from my end.
Thank you.
Thank you. The next question is from the line of Chainam Shah from Equirus Securities. Please go ahead.
Yeah. Hi, good morning. Sir, my question relates to this commercial assets that we are operating. So the leasing is already reached to the 100% level. Just wanted to understand that how many percentage of area would be currently on a rent-free fit-out period. So what could be the total potential for both the assets if we have the 100% revenue coming from all the leasing that we have done recently?
So from both the asset, which is Max Towers and Max House Phase 1, once full revenue kick in, the total potential is INR 500 million or 50 crores of rupees.
Okay. And sir, what is general fit-out period like we give to our tenant? Like, is it 6 or 9 months or something? So that eventually some 1 or 2 quarter might be there to get the full revenue as it is already entirely leased out for both the assets.
It varies from tenant to tenant and from the size of the leasing. As far as fit-out rent frees are concerned, in our experience at Max Towers and Max House, typically it has been 2 to 3 months.
Okay. And so just like this figure number for these 2 assets, if we can give some number to our under construction 2 assets, Max Square and Max House 2, that would be very fine.
So on the numbers, on Max Square, we have a total usable area of close to 7 lakh square feet, and the market price in the local micro market is in the range of 65 to 70 rupees. We would like to continue our ambition of getting at least 30% premium to the local micro market, and this is how we're looking at. And in terms of Max House Phase 2, we have the last lease which we have signed is around 125. The weighted average is 125, and we have a total area of around 150,000 square feet which will go on lease on Max House Phase 2.
Got it. Thank you, sir.
Thank you. Participants, you may press star and one to ask a question. The next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
That you said is 120 crores that we receive per year from the various properties.
On the new development.
The rentals that we are receiving at present, which is totally developed, leased out.
Yes.
On the existing developments which are already leased out.
From the existing development which is already leased out, as I said, Max Towers and Max House Phase 1, the total rental potential is INR 500 million, which is 50 crores. And second source of rental income will come from Max Square, which is around 7 lakh square feet, and Max House Phase 2, which is around 1.5 lakh square feet. And just to give you the indication, Max Square, which is 7 lakh square feet, the rental realization we are expecting is anywhere between 65 to 75 rupees. And as far as Max House is concerned, you can get a very good indication from where we have closed Max House Phase 1, which is weighted average of 125 rupees, but the last rental in Max House has gone already 130 plus. So basis that one can expect what total realization will be. And the third source will be, from a lease rental standpoint, will be from the new acquisition that we have done, which will start construction second half of next year, and development timeline of 3 to 4 years, which will have a development potential of 1 million square feet plus. And given where Max Square will be from a rental realization standpoint, 3 to 4 years hence, one expects minimum 4 to 5% increase in rental per year.
Mr. Hawa, we are unable to hear you.
Okay, sir.
Thank you. A reminder to all the participants, you may press star and one to ask a question. As there are no further questions, I now hand the conference over to the management for closing comments.
Okay, thank you. I hope we have been able to answer most of your queries. We look forward to your participation in the next quarter, and we are really looking forward to build Max Wills 3.0 focused on real estate. For any further queries, you may contact SGA, our investor relation advisors. Thank you and have a great day ahead.
Thank you very much. On behalf of Max Ventures Industries Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.